This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news: metals prices eye a boost from the Chinese housing rescue. But first, in the week ahead, it'll be one dominated by the RBNZ's Wednesday monetary policy statement, one that itself comes about a week before the new government's full first budget. And that too is likely to have key influence on monetary conditions. No one is expecting any change to the OCR, but signals for when it will be cut will be keenly awaited. In the US, we'll get advanced PMIs for May, durable goods orders, and new and existing home sales for April. China, South Korea and Turkey will also have rate decisions due this week, China today. And inflation rates will be released for Canada, the UK and Japan. And sentiment surveys will be released in Australia and the EU, along with retail sales data in Canada. Wall Street has just booked a strong set of earnings reports. Most S&P 500 companies have now reported, and they have reported a 5.7% rise in profit growth, matching the outsized gains of 2022. That was off the back of the prior pandemic weakness. Almost 80% of these companies came in with better than expected earnings per share and 60% better than expected revenues. These sorts of outcomes help explain why both the Dow and the S&P 500 are at record highs, and why many investors don't think these equity markets are overvalued. But we should note that PE ratios are higher than long-term averages now. In China, industrial production growth recovered in April after a disappointing March to be back to the expansion level in the prior 3 months. But this is the only good news in the weekend data dump from the Middle Kingdom. Their retail sales rose by only 2.3% year-on-year in April, down from 3.1% in March, and missing market forecasts of 3.8%. That's quite a miss. And electricity production slipped in April from March to be up only 3.1% in the year. That is a long way from the 8% rise in the year to December. If 3.1% is a proxy for GDP, they are not on track to achieve Beijing's growth targets. And prices for new dwellings fell their most since July 2015. Prices for resales fell even more. The depth of their property sector retreat is laid bare in the official information. It is no wonder they considered a wholesale state intervention in the sector. To clear away the drag that their property market has created, Beijing has taken some drastic moves. The central bank has removed its lower limit banks can charge for home loan rates nationally, and it has cut interest rate benchmarks for housing-related lending by 25 basis points. And it has allocated 300 billion yuan for lending aimed at buying by local authorities for unsold housing for social purposes. They said the 300 billion of central bank cash will translate into an estimated 500 billion of credit overall. And we should keep an eye on what is happening to China's agricultural minister. He was in charge of their food security program and has suddenly fallen out of favour, receiving the standardised accusation of corruption from Beijing authorities. More generally, the UN says India's growth will rise in 2024 to 6.9%, from 6.2% they estimate in January, driven by strong public spending and growing private consumption. The other big mover is Brazil, up to an expected 2.1% in 2025 from a January estimate of 1.6%. The US is still expected to expand by 2.3%, Japan by 1.2%, China by 4.8%, and the EU by 1%. Australia is 1.6%. New Zealand is ignored in this UN review. And the EU released its final April CPI rate, which came in at 2.6% for the bloc, 2.4% for the euro area. Both were little change from March, but sharply lower than a year ago. In April 2023, the EU rate was 8.1%, the euro rate was 7%. Getting rid of dependence on Russian oil and gas has not been at the cost of higher inflation. But we should observe that the range is wide across the bloc between countries. Denmark recorded a 0.5% annual inflation rate in April, whereas Belgium 4.9%, and they're less than 700 kilometres apart. And we should note that the social tensions in New Caledonia are echoing in the nickel market because there's an important nickel mine there. It is the world's third largest producer and may help explain why France isn't taking any backward steps. Global nickel prices have risen more than $2,000 a tonne, up 11% over the past week over these supply fears. It is a key ingredient for making stainless steel. The US Treasury 10-year yield is now at 4.42% and unchanged from Saturday, but down 8 basis points from this time last week. And the price of gold will start today down $4 from Saturday at $2,415 an ounce. That's up $45 for the week and just off its all-time high. Silver has shot up too, up 12% over the past week. Oil prices are still up at $79.50 a barrel in the US, while international Brent price is still just on $83.50 a barrel. Both are a bit more than $1 higher than a week ago. And the Kiwi dollar starts today down 10 basis points from Saturday at just over 61.3 US cents. It is up almost 120 basis points in a week though. Against the Aussie was still up to 91.7 Australian cents and a new 1 month high. Against the euro we're also firm at 56.5 euro cents. That all means our trade weight index starts today at just on 70.4, unchanged from Saturday but at 80 basis points in a week. And the Bitcoin price starts today at $66,732, down a mere 0.2% from this time Saturday. But it's up 10.6% from this time last week. Volatility over the past 24 hours has been low, however, at plus or minus 0.8%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.